Everybody is focused on the wrong thing. Tomorrow, guys, the Federal Reserve is expected to hold interest rates steady. Not maybe, not probably. The market is pricing roughly a 97% chance that rates stay exactly where they are. And whenever Wall Street becomes that certain about something, I start paying attention to what comes next. Because the rate decision isn't the event. The event is Kevin Warsh. Tomorrow will be his first press conference as Federal Reserve Chair. His first opportunity to tell investors how he views inflation. His first opportunity to tell bond markets how aggressive he's willing to be. And his first opportunity to tell the White House whether rate cuts are actually coming. Now, the market already knows the Fed is holding. What it doesn't know is whether Warsh sounds hawkish, neutral, or surprisingly dovish. And that distinction could determine whether the Nasdaq rallies another 2% or gives back the entire Iran deal bounce in a single afternoon. Today, we're going to break down exactly what matters. The 3 outcomes investors should prepare for. The 5 stocks I'm watching most closely and what the options market is quietly telling us heading into tomorrow. So before we talk about Warsh, let's talk about what the market already knows. Right now, the federal funds rate sits at 3.5 to 3.75%. And according to CME FedWatch, traders are assigning roughly a 97% probability that the Fed leaves the rates unchanged. That's essential certainty, for lack of a better word. Which means tomorrow's announcement really isn't news. It's a confirmation. And confirmation rarely moves markets. It's already priced in, right? 97%, it's priced in. But what moves markets, guys, is information that wasn't priced in. And this is where things get interesting. Because for years, investors learned how to interpret Jerome Powell. They knew his language, and they knew his tendencies. They knew which phrases mattered and which ones didn't. Kevin Warsh doesn't come with that history. This is a completely new communication regime. And don't get me wrong, guys. This thing is all a communication interpretation act. What did he say? What does it mean? Oh, when he says that, right? That's what this game is. And Warsh is stepping into this role at a very complicated moment. Inflation is still running hot at 4.2%. We just had a record CPI print this month. Core inflation remains around 2.9%, both above the Fed's target. But at the same time, markets just had their best day in months after the US and Iran reached an agreement that could reduce pressure on energy prices. And meanwhile, President Trump continues publicly calling for lower rates. He's been calling for lower rates since his first term in office. Warsh inherits all of that on day one, and investors have no idea how he's going to frame it. That's why tomorrow matters. So here's the mistake that most of us retail investors make during Fed meetings. We focus on the number, but the number rarely changes anything. It's the language that changes everything. Because markets don't trade today's rates. They trade expectations for future rates. And those expectations are driven by communication, the words that he says. A single sentence can move billions of dollars. A subtle shift from inflation is improving to inflation remains elevated can send treasury yields higher. A comment about patience can trigger buying, and a comment about vigilance can trigger selling. And when yields move, growth stocks move immediately. Because stocks like NVDA, Amazon, Rocket Lab, and many of the market's highest multiple names are valued on future cash flows. Higher yields reduce the present value of those future earnings. Guys, it's a simple formula, and it can reprice an entire sector in minutes. That's why a 97% priced in rate hold can still create a massive market move. The decision is known, right? We're 97% certain of what's going to happen tomorrow. But the interpretation of what they say for forward guidance is not known at all. So I see 3 outcomes, 3 realistic scenarios that we can see tomorrow. So let's start with the one investors should fear the most, a hawkish hold. Rates will stay unchanged, but Warsh signals inflation remains a serious concern. Maybe he emphasizes that 4.2% inflation is still unacceptable. Maybe he dismisses the Iran deal as insufficient evidence that inflation pressures are easing. Maybe he pushes back on expectations for rate cuts later this year. If that happens, bond yields will likely move higher, the dollar will strengthen, and growth stocks will sell off. And the Nasdaq could easily drop 1.5 to 2.5% before the close. This is the outcome the market appears least prepared for. So scenario 2, guys, is a clean hold. This is the consensus outcome. Rates stay unchanged. Sentiment language remains mostly the same. Warsh avoids making major policy commitments. He sounds measured, careful, and neutral, essentially telling investors that he wants more data before changing anything. If we get this, markets will probably remain stable. Maybe a small relief rally, maybe a flat session. Volatility should collapse in this scenario. And anyone who paid a premium for event-driven options likely will get crushed by the IV decay. This is probably the most likely outcome. It's also the least exciting. And scenario 3, guys, would be a dovish lean. This is a low probability surprise, right? Warsh will acknowledge recent progress. He'll highlight improving conditions. Maybe he sounds more open to future cuts than investors suspected. So if that happens, growth stocks would explode higher. The Nasdaq could rally 2% or more, and high beta names become leadership stocks immediately. And social media will spend the rest of the afternoon debating whether rate cuts are back on the table. Personally, here are my odds. 50% clean hold, 35% hawkish hold, 15% dovish lean. But the key takeaway, guys, is simple. The upside surprise is smaller than the downside surprise, and that's what creates risk. So here's the 5 stocks that I'm going to be watching, because if tomorrow becomes a macro event, these names are the ones we need to pay attention to. First, NVIDIA. NVIDIA remains the market's AI leader, right? It is still rate sensitive though, but explosive earnings growth gives it a little bit of insulation. So if we get a dovish outcome, NVIDIA probably leads everything higher. And if we get a hawkish outcome, it falls, but likely less than many of the software names. So for me, NVIDIA is less about trading NVIDIA. It's about measuring the market sentiment. Number 2, guys, is Amazon. Amazon is a cleaner macro trade. Higher rates influence business spending, and business spending influences AWS growth. So Amazon tends to react directly to changes in rate outlook, but it's less volatile than NVIDIA. Still highly informative to see how this one reacts. Next one, guys, SpaceX. Just became public, right? And this might be the most interesting. SpaceX is basically a pure growth story, and that makes it extremely sensitive to discount rates. The math says higher yields should hit it hard. But the challenge is that momentum and retail enthusiasm don't always follow the math. They don't care, right? Give me some SpaceX, right? So this one, if Warsh comes out hawkish, just watch that 155 zone. Not financial advice, but watch that area closely. A break below that level would tell me institutions are repricing growth risk. And next, guys, Rocket Lab, RKLB, just received a fresh upgrade. Normally, that's supportive. But upgrades don't help much when macro pressure takes over. If yields rise sharply tomorrow, Rocket Lab becomes a stress test for speculative growth. And this could be one of the market's fastest moves in either direction. And then we got Adobe, right? This one's a little different. It just reported and took a dump. And the challenge isn't just rates, it's the competition with AI. Analysts are already questioning long-term positioning despite strong revenue performance. So if yields move higher tomorrow, Adobe could face a double headwind, higher discount rates, and ongoing valuation concerns. Is AI going to eat their lunch? That's what makes it an interesting relative weakness candidate. So guys, let's just talk options here quick, because this is where traders can get into trouble, right? Ahead of major Fed events, implied volatility almost always rises. That means options get expensive. Then the event happens, the uncertainty disappears, and volatility gets crushed. You have to remember, guys, when there are events on the calendar and we're not sure the outcome, but we know whatever is decided can move stocks up or down, volatility is going to go up. And that means options become more expensive. And this is the classic setup. But tomorrow's different because we're 97% sure what they're going to do, but nobody knows how Kevin Warsh communicates yet. So there isn't a historical playbook on this one. There's not a baseline. And uncertainty itself has value, which means implied volatility may not collapse as aggressively as traders expect. Still, guys, buying premium here is not easy, right? If we get the clean hold scenario, straddles and strangles could get punished quickly. The move simply won't be large enough in either direction. And directional traders may actually have a cleaner setup. If you believe the market is underpricing hawkish risk, there are ways to express that view. And if you think investors are too pessimistic, there are ways to express that too. But regardless of your position, remember one thing. The press conference begins at 2:30, not 2. The statement moves markets. Warsh's answers move markets even more. So don't assume the first reaction is the final reaction. So here's the real story, guys. What makes tomorrow fascinating, right? It isn't really about interest rates. It's about credibility. President Trump has repeatedly called for lower rates, publicly and aggressively. And Kevin Warsh now has to walk into his first press conference as Fed chair and answer questions about those demands. President Trump says he wants you to lower interest rates. Will you do it? Or are you going to go again? You know you're going to hear that type of stuff. The bond market will be really listening into this because the Federal Reserve's credibility matters. So if investors begin to believe policy decisions are driven by politics rather than inflation data, that conversation gets uncomfortable very quickly. And Warsh understands that. His entire reputation has been built around inflation discipline. That's why my expectation is fairly simple. I don't think he blinks. But tomorrow isn't about what I think. It's about what he says. And more importantly, how he says it. So here's the setup. The rate decision, it's already priced in. Kevin Warsh isn't. Tomorrow comes down to 3 outcomes. Hawkish Hold, Clean Hold, Dovish Lean. And the difference between those 3 outcomes could mean a multi-% move in the Nasdaq before the closing bell. So guys, I'm going to be watching the statement, I'm going to watch the press conference, and I'll have a full breakdown posted immediately after the market closes. And if you found value in this, please hit like, hit subscribe, because that's what we do here. We follow the money, we follow the institutions, and we focus on what the market is missing before it becomes obvious. This is Luke with the Option Bomb, and I'll see you in the next one.